What's going on, people? So this is a video for you guys that have obviously requested that you're in a full-time job, or you want to find out how to actually trade within a full-time job. This is obviously what most people actually have to do when they're actually learning to trade, learning to become a successful, profitable, consistent trader. So there's really too many different job types that I can actually really cover. What I'm going to do is I'm really going to just kind of base this around working full-time, right? You can obviously be working part-time, you could be working in an office, you could be working on a construction site, you could be working from home. There's so many different ways which you can work, which obviously requires you to be present at the current time. If you're working in a restaurant, if you're working in a bar, if you're working in anything along those lines, it's going to be really difficult to be able to get on the charts in the times that you really need to be on there. So this leads me on nicely to my first point, which is actually figure out the times that you can actually be on the charts. Then what you want to really be doing is you want to figure out what pairs actually move in those times that you can actually be on the charts, right? So let's just say, for example, what you're doing is you're in an office and you are on a computer. You don't really have too much supervision, which means you have the freedom to be able to do what you want to do, be able to be on the charts, plus get your work done. And you're in, let's just say, for example, the UK, right? And that's obviously where I'm from. So I can obviously base this really, well from what my experience actually is. So if you're able to trade, during the working day, and you can actually be quite focused on the times when you're actually looking at the chart, then what you can do is actually match the pair to that time, right? So what you actually want to be doing is, if you're trading, for example, Euro USD, you want to be trading those in the two sessions which are in the actual pair, right? So if you've got Euro, you want to be trading in the European zone, and you've got the USD, which is obviously the USD zone, right? So you understand that when you're going to be on the market, when you're going to be in the charts, right, that's actually going to give you volatility, which is actually what you're looking for, so you can actually capitalize on the moves. Now, this doesn't come down specifically to each session or each pair, right? Obviously, if you're trading the higher time frames, which is key to actually being able to trade with a full-time job, what I would say is you really need to be focused on the higher time frame narrative. You need to be understanding what the higher time frame is doing, and then ultimately just be following the trend. That is kind of like the be all and end all. As long as you're following the trend, you've got the higher time frame narrative, and you're trading from a valid area, this is going to give you the initial stages of learning to trade, learning to manage your risk even when you're not really on the chart, right? So ultimately what you're doing is you're swing trading, you're taking a step back, and you're just saying, okay, well, this is the higher time frame narrative. What I really want to be doing is going above this level and then targeting the next level down, right? I think also your stage in life, depending on kind of what job you have, it really depends on that as well. So if you have a job where it's easily transitionable, so for me, for example, when I first started working at 15, obviously it's very easy for me to just bounce between jobs. I could go from restaurants, I could go from supermarkets, I could go from all of these different things, and it didn't really matter where I was going. As long as I was working, I was making some money. So for you guys that are maybe a little bit younger and obviously feel that it's more possible to actually move and change jobs, what I would recommend you could potentially do is actually look to do night shifts, or depending on obviously where you are in the world, this is then another scenario which you then need to take into account. But the higher time frame narrative shouldn't really be too much of an issue with timing, because what you're going to be doing is ultimately just looking to enter from the low or the high of the area that you're looking to trade from, or maybe you can take the equilibrium. This is something, same again, that you can test. But going back to the point of a job, do you think it would be easy to transition into, let's just say, for example, me in the UK, I don't need to be, but I wanted to be on the charts from, let's just say, 7 in the morning all the way up till 10, and then I take a break, and then I want to be back on the charts at 1 p.m, and then I want to be finishing at around 12. Now, it does not mean that obviously I'm going to be stuck on the charts for that whole time, because obviously if you're trading the higher time frame narrative, really all you want to be doing is just doing like 10, 15, 20 minutes of analysis, and then you're going to be setting your alerts and then just walking away from the chart. When that alert goes off, then you can obviously get into the trade, or what you can even do is then set your sell limits, your buy limits, or anything along those lines to be able to help you and kind of automate almost, your trading. So for me personally, what I did when I was, still learning, still studying, what I was doing is I was at university, I was studying, right? And then I was also working a nighttime shift job, which basically what I could do was I could literally just go to the job, I could get the job done, and then I could leave, and I didn't have to worry about it after, right? That really helped me because I think then I'm not worrying about what that job is requiring me to do. All I'm really doing is going home, I'm getting some rest, and then I'm waking up in the morning and I'm getting back on the charts and learning and understanding the narrative, understanding everything that I felt that I needed to. I feel like this really opened up my potential for being able to learn quicker. Obviously what I was doing was, looking at lower time frames and understanding more moves. I had more information to be looking at. And ultimately I was still sticking to the higher time frames. And when I say lower time frames in this context, I was talking about the 5-day minute, the 1 hour, because at that point that was the lower time frames for me. I never even thought about going any lower because I thought that was just noise. Then moving on to being able to trade the minutes and the seconds time frame, this then really clarified for me that actually what I was thinking back then was just absolutely wild. Like, now, even what I do now by trading the minutes and the seconds is still completely wild to me. It completely fascinates me. When you're actually on the charts, you want to be really focused. You want to, not really be missing anything, because obviously the higher time frames is actually going to lead you to be able to take, higher time frame positions. But then ultimately, if you do miss a position, then what you're actually going to do is you're going to fail to, keep your emotions in check. And what you're going to do is go, oh, I missed that. Then I'm going to try and go down onto the lower time frames. And then you're messing around with your work time. You're messing around with your personal time. And ultimately, you're then just not really, you're impacting your trading experience. Same as we went over in the previous video, obviously following the higher time frame narrative and actually understanding the intentions of what the higher time frame is actually doing is then going to be able to benefit you massively, because what you're doing is you're waiting for the direction to actually change, and then you're not really looking for these quick reversals. As when you're on the lower time frames, what you can actually do is go kind of back and forth, right? You're not really doing this on the higher time frames because it takes longer to develop, it takes longer to actually produce the candlesticks. So one thing that you can actually work on the higher time frames is actually looking at the POIs that you're entering from and looking at the characteristics, then maybe going down to the lower time frames, as in like the hourly, and just figuring out, like, does price come into the beginning of the POI or does it come slightly higher, right? Is there inducement? Is there liquidity to be taken out? What is actually happening? As soon as you start to understand higher time frame structure, this is then going to give you a valid level, which, as we spoke about in the how to get started with smart money concepts, this is then going to give you higher probability areas, because you understand that potentially this is a strong high or this is a weak low, right? And then what you want to be doing is it's going to give you targets. It's going to give you understanding of where price needs to get to if it's going to continue, right? And then what you need to do is then just be patient with your management. What you need to do is understand that if you're looking for a 5-hour trade, it's going to take a few days, right? You're going to see a little bit of profit. It's going to start pushing to the downside, and then you need to start then working on your emotions. Psychology is one of the biggest things in trading, right? If you can't control your emotions, then you will very quickly be humbled in the market. I think this is one of the really good things about having a full-time job or having a part-time job while you're learning to trade, is what you do is you actually start to figure out things about yourself. You start to understand your psychological traits of what you're actually doing, in the market, and how you react, what your emotions are like. And you also get a feel for, if you can actually be a long-term trader. Now, obviously, what you want to be doing is building consistency with the higher time frame stuff. And then once you can do that, then you can start moving down lower time frames, because obviously what that's going to give you is the possibility to be able to trade the lower time frame stuff. Now, same again, this is something that I preach all the time. If you understand the higher time frame and you can trade the higher time frame, then surely you're going to be able to do the same thing on the lower time frames. Now, yes, there is new emotions because obviously it's a lot quicker. You've got to react a lot quicker. But really what that does on the higher time frames is it builds that solid foundation, that base of understanding understanding of, you know, what your psychological issues are when you are actually trading, how you can manage your positions. Are you confident with holding it to the full TP, or do you want to take partials? What do you want to do? Because honestly, the only thing that any trader is ever interested in when they first come into this industry is just entries, entries, entries. Now, when you're on the higher time frames, you don't really have those kind of confirmation entries or anything like that. What you're doing is you're just trading from structure directly, which is instantly making you not really worry too much about these crazy, like, you know, small stop losses. How do I get the smallest stop loss possible? You know, all these kinds of things. It's then building a good habit for your trading from the beginning. Now, one of the things that you're really going to want to do is, you know, right now there's, you know, a big hype around prop firms, about getting funded, about all that kind of stuff. When I was first, you know, became a trader, or when I first started learning about trading, there was no kind of, you know, prop firms or anything like that, right? So for me, the issue was I want to trade a big size. I want to make a big profit with a small account. Now the issue is everyone just wants to be funded, everyone wants to finish these challenges, and if you actually fail, then, oh, you suck, oh, you're rubbish, or you don't know how to trade, or X, Y, Z, right? That is the new issue, right? That's the 21st century issue, if you like. What I would say is super, super beneficial is what you can actually do is just use, you know, load up an account with, you know, a very small amount, let's just say, for example, £100, and then what you can do is just slowly and consistently build that up. Okay, whether it takes you a year to double it, it doesn't make a difference, right? If, let's just say, for example, it takes you a year to double a funded account, that's then, for example, 50 grand or 70 grand or 100 grand in 1 year, okay? That's, you know, exponentially more likely going to be a lot more than what you've made at your previous job anyway. So you need to really put this in perspective and start looking at the larger picture and understanding the, you know, this picture instead of this picture, okay? Every single trade does not define you. You need to build a database around, you know, 100 trades, 1,000 trades, 10,000 trades eventually, right? And once you've got all of that data and you're understanding that, you know, your strategy or your system is actually working, then obviously what you can do is then start going for these funder positions, right? And now you're going to be seeing a lot of people on Instagram flexing their 1 pip, 2 pip stop losses, 3 pip stop losses. And I actually saw recently one of my friends on Instagram, they posted a picture of a 7 pip stop loss, they're hereabouts, and they actually got a comment saying, why are you using such a big stop loss? Now there's stigma around, you know, getting these really tiny stop losses for these massive RRs is just gone absolutely crazy. It's great to be able to take these really small, tiny stop loss trades, but ultimately, if you're not profitable, what's the point in doing it? You want to get profitable by using a bigger stop loss, and then once you are, then you can get consistent with going down, 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 and start refining, right? This is then a process. It's all just a step-by-step process. Why are you skipping the rest and thinking, oh, I want to be good on the 1 minute time frame, when you're missing out all of the higher time frame stuff? You're not going to get anywhere, right? It's just the be all and end all. That's as straight as it can be. So I think this is a very good recommendation for anyone, whether you're full-time trading, whether you're, you know, approaching full-time trading and you've got a part-time job, or whether you've got a full-time job. I think it's still a very good basis to start, because what you're then doing is building good habits, building consistency in your approach to the markets. And then once you finish one section of, you know, the markets, if you like, right, the higher time frame stuff, then move down slightly more, right? Then start looking at entering on the 1 hour and the 15 minutes. And then once you have that in check, then you can start going down even more, getting down into the 5 minute, the 1 minute, the seconds even. It's not just the fact that, you know, you can just jump forward because you've now passed your challenge, which, you know, you traded from the 4 hour time frame and now you're funded, does not mean you can just jump straight to the 1 minute or the seconds, right? You still need to take that in a step-by-step process, right? Take it one step at a time. If you try and go from 4 hour all the way to 1 minute, you're going to get slapped about, right? And then you'll be actually going to be going backwards, right? Like 2-3 steps. You want to be taking small steps, okay? There's an image of two ladders actually, right? And what is actually happening is one guy is climbing a ladder and he's all the way up here, and another guy is right at the bottom because his ladders or his steps on his ladders are so big that he can't even reach the next one. Whereas the other guy has been taking so many small steps and he's all the way up here. right? So that's a really nice analogy or a picture, which I really like and I think about consistently when I'm trying to level up my game, right? And understand that if there's something that I want to improve on or I want to tweak, then I need to take these small steps to get to that point. And once you are consistent with the 4-hour trading, right, what you then want to do is you want to start investigating these lower time frames. So then you're not just completely transitioning from 4 hours straight to 15 minute, then what you're actually doing is you're investigating and you're building case studies around the next time frame down, right? Which is then going to build more data for you, because the main aim of the game is actually to be profitable, right? To actually make money. It's not about who can take the smallest stop loss or who can take the biggest RR trade. It doesn't make a difference, right? If you're profitable and you're making money, it doesn't make a difference. So to wrap the video up in 2 specific points, what I would say is you really need to focus on higher time frame narrative and higher time frame structure. And the next thing you could be doing is working on your psychology, right? So really taking notes of all of the bad things or the mistakes or anything like that you're actually doing, working out how you can work around those and how you can actually stop making those so consistently, and build a process around it so you can actually stop doing it, right? Because without a process, you can't just stop, and you're never going to get rid of emotions because we're human beings, right? We're going to have emotions forever. Hope you enjoyed the video, guys. If you did take some value from it, make sure to hit the like button, comment what you thought down below, and subscribe, and I'll catch you guys in the next video.